立法會主席。
The President. Good morning, members and government officials. We will carry on with the motion debate on developing a strategic tax regime to consolidate Hong Kong's status as an international financial center. Dr. Eric Yim. Thank you, President. Hong Kong is an international financial, shipping, and trade center. We are at the critical juncture of global economic restructuring. There has been more fierce regional competition. We need a forward-looking and flexible tax regime. There is a pressing need for us to come up with this regime to enhance our appeal. This is also to dovetail with the national strategies. The strategic tax regime mentioned in the original motion is not just about rolling out tax incentives. Instead, it is about promoting the joint collaboration of upstream and downstream sectors. Currently, the SAR government is proactively taking forward tax incentives for commodity trading. It will provide 50% tax concession for qualifying commodity trading. For qualifying merchants, the actual tax rate will be lowered to 8.25%. They, however, will be asked to spend no less than 30% of their expenses on the professional services in Hong Kong. Qualified or designated services include shipping, manager shipping, brokerage, as well as maritime services, and so on. This will not just enhance maritime services, but it will also drive other high-end professional services. And this will create complementary advantages and synergy among trade and other services. For targets of tax incentives, they should be extended from maritime service provider to logistics and supply chain management service providers. This is to create a clustering effect of high value-added professional service providers. That way, we could build Hong Kong into an integrated commodity trading and risk management center. The SAR government has also been promoting Hong Kong as an aircraft leasing center. We can adopt the above suggestions for aircraft leasing. This is to enhance the breadth and depth of the sector. Concerning financial legal services as well as valuation services, they could be regarded as part of our professional services. And for aircraft lessor, if they make use of these services, they could enjoy extra tax concessions. This is to create deep integration between aviation and financial services. And this is to also enhance our international competitiveness of the aircraft leasing ecosystem. We should work closely with our country. We have to stick to the Belt and Road Initiative. We need to speed up the development of the Greater Bay Area and the Northern Metropolis. We need to help mainland enterprises to go global. We have to harness our tax tools to bring together resources. This is to foster the high-quality development of the relevant sectors. Our tax system is our core competitiveness. It is also a key driver for us to build ourselves into an international financial and shipping center. We have to upgrade our industries, including aviation, and we have to bring together talents. I speak in support of the original motion and the other amendments. Thank you. Mr. Ronald Chen. President, I thank Dr. Webster NG for the motion. We are facing reforms in the global tax regime after the implementation of BEPS 2.0. Relying on low tax regime to attract businesses is no longer sustainable. We need a more forward-looking tax regime to cope with the change of the global landscape, as well as the challenges. The last reform of our tax regime was about half a century ago. In between, there has been revision to our tax regimes and policies. However, we lack an overall planning. In the past, we relied on land revenue, and the land revenue has been helping us to promote the development of various industries. In recent years, the SAR government has rolled out various tax concessions. The government is setting up the advisory committee on tax policy. It should review our tax policies to come up with population policies as well as to come up with a new tax regime framework. We can learn from other jurisdictions to introduce green taxes as well as goods and services tax and so on. And this should be part of our first 5-year plan for Hong Kong. A strategic tax regime can help stabilize our public finances. It could also help us bring together top-tier talents from around the world. That way we can channel resources to our headquarter-based economy as well as our wealth management, green finance, as well as other sectors. I have the following suggestions. To enhance our headquarter-based economy, we can learn from Singapore. For qualifying headquarters that are newly established in Hong Kong within a certain period, they could enjoy a tiered or progressive tax rate. And for those with bigger profits, they can enjoy more tax exemptions. That way, we can encourage global corporations to allocate their businesses in Hong Kong so that other industries in Hong Kong can also benefit. For sustainable sectors, such as green sector, there needs to be a targeted tax regime. For R&D related expenditure, there should be greater tax breaks. Take the banking sector as an example. I've been calling for this for years. Building on the foundation of double taxation for certification institutions that require certification fees, they should enjoy a tax break too. Also, for green bond issuance expenditure and relevant costs, there should be a tax waiver as well. This is to encourage enterprises to take part in green projects to promote sustainable development. Talent is key. In order to attract talent engaged in key enterprises and sectors, we should come up with an integrated tax incentives as well as support measures. For talent in fintech as well as aerospace, they should be able to enjoy a tax break. For example, there should be a 2-year salary tax allowance for them. Also, rental expenses is part of their consideration when they decide whether to come to Hong Kong. For the first 2 or 3 years after talents have come, there should be a reduction on the taxes that are related to their accommodation to reduce their burden. We have been adhering to a territorial source principle for taxation. In recent years, we see vibrant development of our arts and cultural industry. Many performance groups have been coming to Hong Kong. The revenue to be gained from by the government from them is limited, so we should give them a half-rate tax concessions to attract top-tier performance troupes to come to Hong Kong. This is also to attract footfall and to improve our image. Tax regime is key to our competitiveness. Speeding up the formulation of a strategic tax regime can help us seize opportunities. That way, we can also polish our image as an international financial center. I support the motion and amendment. Thank you.
Dr. Hui Simon Lee. Thank you, President. We are moving towards fintech. We are moving fast in our transformation. tokenization, digital assets, these are the main areas in which we need to gain an advantage. Fintech is an all-new system. It's not just a blockchain plus traditional finance. We need a strategic tax regime to turn institutional dividends into sustainable competitiveness. Regarding digital assets, exemptions can be extended to private equities as well as other eligible institutions. At the same time, digital assets, precious metals, they are qualified investment items under family offices. ETF shares and transactions will also be able to given exemptions. Some products are levied under the profits tax system. This will reduce the management costs. My suggestions are as follows. At present, for new enterprises, they are eligible for an additional 50% of tax exemptions. As for tech enterprises, they can enjoy a maximum of 300% R&D tax cut. AI, smart technologies, auditing, these will also be covered. In relation to real-world asset issuers system and stablecoins, there is also a profits tax exemption system. We are the first ever jurisdiction legislating for stablecoins. The costs are huge, especially in the first stage. For skilled positions or compliance teams, if we can make a pledge to reduce their costs, we will be able to get an edge over our competitors in relation to new technologies through the provision of tax exemptions. We will implement the framework in relation to crypto assets under OECD. We need to allow financial institutions to gain exemptions in the profits tax when it comes to procurement of technologies or expenditure when it comes to technology. We also need to provide more exemptions regarding profits salaries tax in order to attract more talent. We need to be more forward-looking. We need to make good use of the top-up tax in Hong Kong. In 2027 to 28, it will be the first complete income year. We need to allow the funds to be plowed back to fintech ecosystem. Blockchain, auditing, tokenized bonds, AI finance, we need to provide more exemptions. At the same time, we can reduce the overall costs of the fintech enterprises in Hong Kong. We need to drive innovation. Our competitors can replicate our low tax regime. However, it is impossible for them to replicate our large-scale family office management system. They cannot replicate our investment management market ecosystem either. We need to develop a strategic tax regime to cover talent, compliance, capital infrastructure. All these need to be connected. This is how enterprises will access reasonable services at a reasonable costs. Thank you. Mr. Bill Tang. Thank you, President. The changes in tax echo the principle upheld by the FTU, that is, those with more pay more. Regarding the stamp duties on luxurious apartments, and ultra high net worth individuals or those top earners will have to pay more tax, and this is indeed an embodiment of the principle of those with more pay more. Today we're discussing strategies. We need to factor in the changes in the world. From the digital age to the era of AI, we are witnessing changes in the world. For those holding virtual assets, or in the future, virtual assets may be used to pay wages. So how can tax be levied? How can we deal with that? When it comes to the added value of VA, how can we deal with that? Other countries have started to cover this. What about Hong Kong? In the age of AI, competition is getting keener and keener. Some enterprises enhance their productivity by way of algorithm. It's been in discussion whether AI algorithm needs to be levied. I hope we can look into this issue from a strategic perspective. I'm glad to hear from Dr. Webster Ng about corporate rescue regime. From 2012 to 2016, I represented the labor sector as a district council, as a legislator. Back then, there were two bankruptcy cases, one ATV and the other California Fitness. There was a gym chain. I helped these staff members to fight for their benefits and interests. As for ATV, things took a turn. There was a white knight to make investments into the group. At that time, I helped the staff members to follow up on the cases. On behalf of staff members, I discussed with the representing barristers about how we can better protect staff members. At that time, there were voice actors and they were employed on a self-employment basis. Voice actors did not get wages. What they got was a service fee. They wanted to get the consent of creditors, and the service fees of voice actors were all paid. Regarding pregnant employees, they needed to assume that the pregnant staff members had not been laid off. It was the only way how pregnant employees could get all the wages, that is, 4 weeks before the maternity leave and 6 weeks afterwards. The statutory moratorium lasts for 45 days, but the key is whether the enterprises are worth more investment. When there is a corporate rescue regime that will rid staff members of the bargaining power of negotiation. However, times have changed. We are after economic development. We need to pursue development. Under the company's ordinance, can we make adjustments to what staff members are owed? Can we take a holistic review so that we can achieve a win-win situation? Thank you, President. Mr. Brave Chan. Thank you, Dr. Bernard Chen, Undersecretary, and Mr. Christopher Hui, Secretary. This motion is about developing a strategic tax regime to consolidate Hong Kong's status as an international financial center. I speak in support of the motion moved by Dr. Ng and the amendments moved by the other two members. We all understand President Xi emphasizes opening up, enhancing our international competitive edge, enhancing our efficiency, and so on. At the Global Financial Forum, the chief executive said that we enjoy the advantages of having the one country, two systems. We have a common law system. These provide a platform for global investors. Under the leadership of the chief executive, as well as the president of the council, we have provided our views on the inaugural 5-year plan of the Hong Kong SAR. Our institutional strengths lie in a low and simple tax regime. We have NPC deputies, we have CPPCC representatives, and a lot of groups and high-caliber talent want to come to Hong Kong to experience what is good about Hong Kong, not least the low and simple tax regime. The government has done quite a lot in this area. For instance, family offices bring over $10 billion of revenue to Hong Kong. We also have different connect schemes. The stablecoin ordinance also showed how we are moving fast and efficiently. This is the first ever we have seen in the world. Regarding real-world assets RWA, they play a very important role in consolidating our status as an international financial center. We need to attract capital from around the world. We also need to draw for talent from around the world to Hong Kong. This is how we can benefit Hong Kong. In this connection, the DAB has different suggestions. We ask for more tax exemptions for digital asset infrastructure, including communication center, data center, communication infrastructure, and so on. I'm on the board of a listed energy company. Our country is leading the world when it comes to power supply and power generation. Whether you use fossil fuel, natural gas, nuclear energy, you are subject to energy taxes levied by others. So how can we go ahead? We also propose to launch tax exemptions for consortiums. We need to allow companies under these enterprises or consortiums to enjoy tax exemptions when it comes to R&D outcomes. This is exactly how we can develop Hong Kong into an international INT center at full speed. We also suggest expanding tax concessionary measures for patent boxes. We need to radiate the influence to the other GBA areas such as the Loop, Tianhai Cooperation Zone, Nansha, and so on. Just now I talked about green energy, and that also covers hydrogen energy enterprises. So we need to enhance the government's procurement when it comes to these products. Hydrogen energy, importing energy into Hong Kong from the Chinese mainland, we need to provide tax exemptions. This is how we can turn into a better account our institutional strengths of one country, two systems. We need a better strategic tax regime to dovetail with the inaugural 5-year plan of the Hong Kong SAR, which will be announced by the chief executive. This is how we can maintain connections with the world, enjoy strong support from our nation, and consolidate our status as an international financial center. Thank you.
Mr. Alan Chen, thank you. We're talking about a strategic tax system. This will determine whether Hong Kong can accurately deliver on our country's positioning for Hong Kong under the 15th Five-Year Plan. In 10 years' time, we want to overtake London and catch up with New York and become the largest financial center. By 2035, we want to turn our country into a leading financial power. We have to face up to the fierce competition at the moment. For family offices, especially single-family offices, Singapore has a threshold that is lower than Hong Kong's. That's half as much as Hong Kong's. In terms of investment, Singapore offers incentives for companies to set up corporate treasury centers. They get a concessionary tax rate at 8% and 10%. That concession will last up to 2031. Dubai also has a 0% tax concession for corporations. They also offer a 0% income tax for ultra-high net worth individuals. Of course, you have to meet certain criteria to qualify. Our own CTC concessionary rate is still at 8.25%. It's competitive, but the approval process is way worse than that of our rivals. We cannot simply bank on our own simple and low-tax regime. There would be no way for us to reach our 10-year target without any change. We should lower the threshold for single-family offices from $240 million to $120 million so that we're at the same level with Singapore. We should also incentivize the issuance of local green bonds and social impact investing. We should channel money into the real economy. We should also set up an incentive system for family offices to set up treasury centers. Their financing and cash flow should also qualify for the concessionary rate of 8.25%. We should expand the scope of tax withholding. That concession should also be extended to the end of 2031 so that we are aligned with Dubai and Singapore. Now, in Dubai's free trade zone, they have a certain arrangement. So we should learn from that, and so that we should offer a concession only if someone invests in Hong Kong and hires at least 3 local employees. Now, the global minimum tax rate of 15% has ended the race to the bottom. But Singapore offers an RIC system, so that they're rebating some of the tax payment. Unused amount can be tapped within 4 years, and that's still in line with the minimum tax regime. So we should set up different tiers of RCI. We should apply that to advanced manufacturing, expansion of headquarters and commodity trading, green energy, and decarbonization, as well as digitalization. For a company, they should meet minimum requirements such as hiring at least 3 local workers and investing a certain sum. We should build a commodity trading ecosystem and strengthen our offshore RMB business hub. And we should focus on the northern metropolis. In the first phase, businesses should pay no tax in the first 2 years and pay half tax for the next 3 years. We should expand tax-deductible areas to insurance-linked equities and private equity funds, so that the $2.3 trillion fund that comes in can go into those assets. Your time is up. Professor William Wong. The world has moved into the AI era. AI has reshaped the job market and our economy. Global tech firms such as Amazon and Meta have announced massive layoffs, and they're committing resources to AI. Like all previous technological revolutions, the power of AI may lead to massive technological unemployment. Economists expect that junior jobs are most vulnerable. That's because these jobs involve repetitive tasks and these jobs may be automated away. Fresh graduates without work experience will be in a tough spot. Agentic AI can make decisions on their own. This can make starting a business way easier. And this can encourage entrepreneurship, and people can become slashers and freelancers. AI is having an impact on the economy and the job market. A far-sighted tax system can support businesses and soften the blow to the community, the economy from technological disruption, and then Hong Kong can stay ahead. On the prospect of AI taking jobs away, Bill Gates, the founder of Microsoft, proposed ideas of a tax on robots. He argued that when robots replace human workers, the value created by robots should also be taxed. If businesses sack workers and hire robots, shouldn't the savings also be taxed? That tax revenue can be redistributed by the government for retraining or basic living support. That way, firms can pursue growth while also shouldering social responsibility, and that can help ensure social stability. OpenAI released a framework. They proposed exploring a new taxation system for automation. They also proposed a public wealth fund that is linked to the profits of tech firms. The government has to lead the discussion at the community level. We have to look into these areas to find a tax regime that suits Hong Kong. Another area that we have to think about is to come up with a sensible taxation model in the new age. The platform economy is booming. New economic activities are thriving. For gig workers and social media content creators, they make profits online, they receive tips online, and also reselling on platforms. There is much informal income on such platforms. How do we assess these sources of revenue for taxation? And there's also a problem about taxing income from overseas platforms. This is more than just about a level playing field. It's also about coming up with a sensible framework for us. There's no turning back the development of AI. For us to stay ahead, we will have to show foresight and flexibility in our design. We cannot hold back technology. We have to make sure that all walks of life get to share in the benefits of technology. We have to make our society or keep our society competitive. I support the motion and amendment. Mr. Robert Lee. Thank you. Our independent taxation regime is guaranteed by the Basic Law. We can legislate for our own taxation system. We also serve as a separate customs territory. Private property is protected. We remain as a free port. A simple and low tax regime defines our competitiveness. We do not charge capital gains tax, a sales tax. We do not charge an estate duty. The government has also improved our taxation system over the years. We have a two-tiered salaries tax. We offer concessions for the carried interest of private equity fund and family-owned investment holding vehicles. And we also apply the $100 stamp duty to more properties. For the stock market, the stamp duty on stock transaction down to 0.1% on the buyers and sellers. The market makers of futures will also have their duty waived. Exemptions for the stamp duty are also simplified. That's making life easier for the industry. Industry players told me that after the legislative changes under the last government, they are now dealing with much less paperwork now. To further cement Hong Kong's competitiveness, we should continue to improve our tax system. We should expedite the development of gold trading and commodity trading on asset management. This year, the government will amend the law on tax concessions for funds, family-owned investment holding vehicles, and private equity. The government should further streamline the application procedure for concessions for the carried interest of private equity funds. That will lower compliance costs and save time. For locally registered funds recognized by the SFC, there should be tax concessions so that we can encourage the development of public funds. Some also call for tax concessions and a lower listing fee from the Hong Kong Exchange Fund so that more larger funds from overseas can be listed in Hong Kong. This can enable the local capital market to thrive. On encouraging gold and commodity trading, there's a half tax concession for large commodity traders. The industry hopes this plan can be implemented with details announced. The government should continue to stimulate the capital market with tax concessions. We should further adjust our stamp duty. There should be differential rates of stamp duty for different kinds of stocks, and we should improve our mutual market access schemes. The government should improve our tax regime in a variety of ways. We should streamline the process. We should foster the financial industry so that Hong Kong can give play to its status as financial center. I so submit and support the motion and the amendment.
Mr. Jimmy, a lot of foreign traders told me they choose to come to Hong Kong because we enjoy the advantages of having our support from the motherland and we're closely connected to the world. Also, it is because we have a low and tax regime. The outline of the National 15 Five-Year Plan clearly states that we have to further consolidate our status as an international financial center. We also have to enhance our competitiveness as the world restructures its economic landscape. We also have to continue to polish our brand as an international financial center. We're faced with complex geopolitical situations, and we have to cope with the challenges as we continue to adhere to a low tax regime. There are both internal and external challenges. Internally, the OECD rolled out a 15% global minimum tax rate. Also, neighboring places have continued to roll out tax concessions, and that dilutes our competitiveness. Externally, there are views that we have been targeting financial INT and wealth management services, and that our entry threshold is not low enough and it's not flexible enough. We have to break away from this mentality and we have to learn from global practices. First, we have to introduce flexible tax concessions. Singapore is the best example in this regard. With global tax levy, Singapore rolled out flexible tax concessions to build corporate centers. Based on the economic contribution made by MNCs in Singapore, a 5 to 15% tax concession applies, and this measure has attracted global NMCs to go to Singapore. Also, we have to target certain industries. We can learn from Switzerland and the UK. These two countries are the biggest commodity trading centers, and with the 15% global minimum tax rate, they adopt two strategies. For commodity traders that fail to meet certain threshold, they can enjoy tax break, for example. For the UK to build its green tech sectors, it also provides tax concessions. Third, we should roll out tax concessions for top-tier talents. In Singapore, there is the same path, and for top-tier talents, they enjoy tax breaks based on the income they make. In Dubai, for designated top-tier talents, they can be exempted from personal salaries or profits tax. These countries have all relaxed their tax barriers to enhance competitiveness. Now I'd like to talk about how to develop our industries. First, on INT industry, I agree that we should have a dedicated legislation for the Northern Metropolis. The BPA called for a 5-year tax waiver for high-end manufacturing as well as green tech and green finance industries. For top tiers with high salaries, they should get a 5-year tax waiver on salaries tax. Also, to attract global commodity traders, we have to invigorate the logistics ecosystem. Third, we should continue to remove the liquor duty to build Hong Kong into a transaction and storage hub. Also, on IP, we should have cross-boundary IP system. We should have relevant tax concessions. We should continue to improve the patent box regime to further promote IP protection and to boost our competitiveness. Lastly, I'd like to stress one point. A low and simple tax regime is our biggest strength. We have to keep that. However, we also have to move with the times and roll out more tax concessions to maintain our competitiveness. I speak in support of the motion. Thank you. Members, according to the House rules, this motion has to end before 11:03. I will ask the mover to speak at around 10:33. Then we will deal with the rest of the procedure. Mr. Dominic Lee, in the face of global restructuring, various cities around the world has rolled out tax incentives to attract businesses as well as talent. Hong Kong is an international financial center, so we have to continue to improve. All along, we have had a low and simple tax regime. However, we have to ensure tax stability and enhance competitiveness. This is a pressing topic. So I thank Dr. Webster NG for moving this motion on developing a strategic tax regime to consolidate Hong Kong's status as an international financial center. This gives us an opportunity to have an in-depth discussion on this. I prepared a speech on this. However, when I came in just now, I heard Professor William Wong talking about influencers and the relevant economic industry they drive. I'm quite familiar with this, so I'm going to drop the speech and I'd like to talk a little bit about my personal views. There are various platforms that deal with influencers' profits. There are various practices. YouTube abides by the most stringent practice. It's on Google. It asks influencers to declare their income every year. It's like the W-2 form from the US. And based on influencers' income, they make an arrangement. I'm not sure if YouTube has a deal with the IRD. Employers in Hong Kong, they have to declare their staff income. However, are there any deals between YouTube and the IRD? I'm not sure. Take X and other platforms as an example. Based on click rates or view rates, there might be costs arising from ads. Facebook, Instagram, and X do not require you to declare income. So there are reasons to believe that influencers do not have to declare their income. So these platforms rely on influencers to file their own taxes. In the mainland, there are two types of platforms. Take Xiaohongshu as an example. There are ads on the platforms and the profits go directly to your account. As for Douyin or TikTok, again, they do not require you to declare your income or profits. So I believe that there are many influencers or online celebrities who do not declare their income. Some merchants may ask you to place an ad for them on Xiaohongshu. The income you generate from that goes directly to your Xiaohongshu account. So there are many loopholes. With these loopholes, do we need to plug them? We have to think about this. In Hong Kong, we no longer enjoy a friendly environment for influencers. This is because living costs here are high. Many influencers actually choose to move back to the mainland, like Shenzhen. Others choose to move to other places. Well, there are many different scenarios. They take into consideration their own conditions as well as tax filing when they decide where they should move. So we have to tread carefully. In Hong Kong, we adhere to a low and simple tax regime. How do we maintain the competitiveness of this regime and encourage more people to come to Hong Kong to pursue their career? I so submit. Thank you. Dr. Junius Ho. Thank you, Deputy President. I also thank Dr. Webster NG for moving this motion. This motion is about developing a strategic tax regime to consolidate Hong Kong's status as an international financial center. The motion stimulates my thought. The motion talks about corporate rescue regime and attracting talent. We've talked about how to compete for talent in previous motion debates. On tax incentives, we've also discussed this many times on different occasions. However, how can we develop a strategic tax regime framework to open up a new world? This deserves our discussion. We've set a red tape that cannot be overcome. Say we have to adhere to a tax regime because this is stipulated in the basic law. So we try to keep everything simple. We have profits tax, salaries tax. We also charge stamp duty. We can impose a higher tax rate for the government to gain more tax revenue. These are all great ideas. We've also talked about charging airport passengers a departure tax. We also have the hotel and accommodation tax. Well, we've been criticized for levying these taxes as we continue to broaden our tax base. Well, it's necessary to broaden our tax base, but we have to maintain our attractiveness. However, nowadays, it's no longer appealing to adhere a low and simple tax regime. If we are to roll out more tax incentives, this is that we will gain less tax revenue. Well, you might say that we can attract more people to come and we can still gain more tax revenue. However, it's hard for us to attract more people unless we come up with new ideas. For example, developing new technologies. However, we won't be able to see immediate outcomes or results. Now, coming back to what we should do. In our first 5-year plan for Hong Kong, we can set a target on gold trading. London accounts for 50% of the share of the market, followed by New York, which accounts for about some 20%. Then it comes to Shanghai, Hong Kong, and Dubai. We account for a very small share of the market currently. In the coming 5 years, we can expand the market. We should aim at surpassing London to broaden our share in the market. That would be ideal. If we can do that, we can levy value-added tax. If not, we can also charge stamp duty on stock transactions. For every ton of gold, it can cost $1 billion, and if you levy 1% of tax, that would be substantial. That would significantly improve our life quality with this tax revenue. That would also significantly boost the government's reserve. If you can be bold in this regard, and we can gain more tax revenue, then people would come. They don't mind paying stamp duty. As long as there is money, they would come. On attracting businesses, we have to grow our gold market. We have to rank the 3rd instead of the 4th around the world. We should aim at surpassing Shanghai. I so submit. Thank you.
Mr. Wu Yingpeng. Thank you, Deputy President. The global economic and financial landscape is being reshaped. We have the strong support of our country, we have our own strengths, and we are well positioned to achieve upgrading and transformation of different industries. We are upgrading from our position to a superconductor and a super value adder. We are now developing a strategic tax regime in order to toll for talent from around the world. These are what we need, and this is also a good backing for us to dovetail with the 15th five-year plan. I specifically agree with Mr. Chen with his amendment. The North Metropolis is the engine for driving forward the development of new quality productive forces. We need to attract high caliber talent from around the world, we also need to attract top-tier clients to come to Hong Kong. This is how we can further enhance the local INT ecosystem. Developing a strategic tax regime will help us achieve stimulus. In Hong Kong, according to the relevant legislation, we provide R&D tax exemptions for enterprises. However, there is still room for further enhancement. Dr. Lai is the first ever payload specialist launching into the space. This is the pride of Hong Kong. This also shows our integration into our nation. This has injected great momentum and vitality to the local INT industries. We need to continue to leverage on this opportunity to continue to enhance the local INT ecosystem. We need to expand the R&D platform. We also need to increase investment in this area. I hope that the government should seize upon these historic opportunities and consider reviewing the tax regime in the first 5-year plan of the Hong Kong SAR. We need to ensure that we stay ahead of the curve in this era. We need to provide more tax concessions and exemptions. However, we need to be targeted in developing a strategic tax regime. We need to have all criteria and factors considered, and at the same time, we should expand such a strategic tax regime to not just tech enterprises. We also need to provide exemptions to other areas such as law, accounting, IP, and so on. These are professional services, and this is exactly how we can leverage on the traditional strengths of Hong Kong for professional service institutions in the Northern Metropolis to share the development dividends. By so doing, we can attract top-tier talent and enterprises to Hong Kong. I support the motion. Thank you. Professor Alex Fan. The original motion and the amendment support the development of the tax regime with strategies. I echo their views. I agree with this direction. Mr. Chen referred to providing tax exemptions in the dedicated tax legislation regarding the Northern Metropolis. I'd like to provide my views. The core of the competitiveness of the tax regime lies in the fact that the predictability is above the nominal tax rate. When family offices and multinational corporations choose a place to set up presence, they need to check the certainty of the tax regime of the relevant destination. So far, over 6,000 financial institutions have set up operations in Dubai, given their zero tax guarantee. Regarding Singapore, they have Section 13O and 13U under the Income Tax Act of Singapore. They aim to enhance flexibility instead of tighten the concessionary measures. These are clear messages. In these jurisdictions, the tax policies do not chop and change. Despite the fact that Hong Kong has a low and simple tax regime, there's a lack of pledge. The FS will lead the Advisory Committee on Tax Policy as announced in the budget. This is indeed worth our recognition. On this basis, I suggest that the government continue to undertake more studies regarding enterprises setting up operations in Northern Metropolis. There should be a guarantee about stability and certainty about taxation for these enterprises for a year. This will also send a clear message to the international market about the special strengths of Hong Kong. Regarding BEPS 2.0, we need to turn from a low tax to a targeted tax. According to the OECD BEPS 2.0, Hong Kong has started to launch the top-up tax and the global minimum tax starting from the 1st of January 2025. This will ensure that the tax will not be below 15% for M&Es. We need to move with the times. The government has the right mindset going forward. The FSTB has floated a series of measures. The FSTB has extended the scope to cover even more industries such as commodities, precious metals, digital assets, carbon emissions, and so on. This is exactly what I mean by turning from a simple and low tax regime to a targeted one. I suggest that the government further institutionalize these tax incentives in the first 5-year plan. On a regular basis, the government should take stock of the effectiveness of the relevant tax policies and their economic benefits. This will ensure the prudent use of public funds in driving forward the long-term development of Hong Kong. The global minimum tax shouldn't be a stumbling block. Instead, it should be a factor that drives the development of Hong Kong. We need to turn from a simple and low tax regime to a targeted one. We need a strategic tax regime to attract international capital to Hong Kong. We need a targeted tax regime, and this is how we can consolidate our status as an international financial center in the first 5-year plan of Hong Kong. Thank you. Mr. Duncan Chiu. Thank you. I speak in support of Dr. Ng's motion and the amendments. According to the Global Financial Centers Index, Hong Kong has risen through the ranks, ranking third globally and first in the Asia-Pacific regions. This shows us that we cannot stay complacent. We need to redouble our efforts to make enhancements. If need be, we need to introduce new measures, including more tax concessions, in order to enhance the competitiveness of Hong Kong. On attracting foreign investment and enterprises, Hong Kong has turned from a passive position to an active one. We used to rely on a low and simple tax regime. However, now we have turned to focus on targeted industries. We have Oasis, and we have successfully introduced 102 leading enterprises. We have racked up about 22.5 billion revenue. The IP profit tax rate has been reduced to 5%. And we have set up the Advisory Committee on Tax Policy. We want to take on board views from different sectors in order to support the economic development of Hong Kong and the competitiveness of different industries. As I mentioned, there is keen competition for high-quality enterprises and top-tier talent. Our policies need to keep moving with the times, so we need to be innovative. In 2025, in order to support INT development, our country has provided tax concessions. In the first 2 years, tax concessions are provided to different circuit products. There are also some leading prices which can receive full tax concessions in the first 5 years regarding their profits. Singapore, in 2026, it used AI as the anchor of their national strategy, providing tax concessions of as much as 400%, which is more appealing than our concessions at 300%. Singapore has launched a package of measures, and we can see how competitive their packages are. In 2024 to 25 budget, I asked about the R&D concessions, and it stood at $4.41 billion. However, in 2024, the R&D expenditure totaled $35.772 billion. Then we need to think, why only 12%? Is it because our project is not appealing enough? Or is it because most of the institutions taking part in R&D in Hong Kong are public enterprises, hence a lower figure? I believe it is worth our consideration. Dubai recently launched a no profits tax measure. It has drawn about 8,000 enterprises to Dubai International Financial Center for registration. This shows the important development of Dubai. We shouldn't compete on a low tax rate. We need to consider the different measures available in the market. So the 300% of the R&D expenditure tax exemptions should be increased to 400%. We need to tie in with different talent admission schemes, and we need to consider different application scenarios. We need to promote the development of patient capital, semiconductor, AI, aerospace, quantum technology, life and health technology. These are the leading edge areas of technology. We need to provide strategic tax concessions in order to meet the demands of enterprises that we want to attract. R&D expenditure should receive tax concessions. We hope to attract more strategic enterprises to come to Hong Kong. Thank you. I support the motion.
Mr. Peter Xu. Thank you, Mr. Deputy. On attracting companies, investment, and talent, Hong Kong has many appeals. We are a safe city. Our people here are friendly. We have a robust legal system. Our tax system is part of the appeal. We had nothing, no resources. People came here because of our low tax regime. That's why people were willing to come here to do business. And they could take their money away if they wanted. Some examples. Take the duty on red wine. We scrapped that duty, and then all the red wine trading came here, and then we became a red wine trading. We have no red wine manufacturing here. So the tax regime can make a huge difference. Or take the liquor duty. We reduced the duty, and then the trade boomed. So the motion today is about designing a tax regime. Other places also boast a low tax regime. They want to offer a similar system. In the Middle East, if you invest a huge sum in hundreds of millions of dollars, some jurisdictions offer a tax-free arrangement. So how do we keep quality enterprises, and how do we lure more quality businesses? That should be the focus of our discussion today. I welcome a half tax concession for commodity traders, and in some cases the profits tax will go down to 8.25%. Singapore has also drawn many large financial players, businesses in heavy metal or precious metals. Our new tax concession will draw a lot of business. Can we go further in our tax concessions down the road? Innovation and technology is all the rage now. Can we offer concessions to bring more such players here? That merits further exploration. The motion today is not just about the tax regime, but also about improving the corporate rescue procedure. This is a major topic. I know Dr. Webster NG has included this procedure in his motion. Simply put, if we have a law on corporate rescue procedure, that gives a company in distress more breathing space. It sounds like a good idea because we're giving more time to a company so that we can save it. But then let's approach it from a different perspective. I have waded through the papers. Over the past 2 decades, we discussed this matter time and again. It's a highly contentious issue. There were public consultations. In the end, no legislation followed. There are benefits, but then there are also concerns from the labor sector. Workers may not get paid. That company is on the verge of bankruptcy. This company is heavily in debt. They cannot even pay their suppliers, so the workers end up having to turn to the Protection of Wages Support Insolvency Fund. So the first party to get the claim in gets paid first. I also heard the labor side's concerns from Mr. Bill Tang. For small and medium enterprises, they also have their concerns. Let's say for this company, they get a 60-day pay term, but then 180 days later, the sum is still outstanding. So I apply for the winding up of this company, but if you have a corporate rescue procedure in place, I cannot petition for the winding up of this company and then things drag on. If I'm the supplier, I have to pay my own importer. I don't know how much I can recoup from this company in debt if I get paid at all. Maybe this company in distress finds a white knight. But for a company in normal operation, will this company truly wait till the last moment to secure the funding to pay their suppliers? If they are in financial distress, they look for a white knight early on. They don't wait till the last moment. So this contentious matter warrants further studies. Mr. Ken Lee. I support Dr. Webster Ng's motion. To cement and strengthen our status as a financial center, we have to rely on something more than just our low tax regime. We have to look at financial technology innovation, finance, innovation, technology, and talent. It's a good idea to have a strategic tax regime. We need a consistent tax regime. We also have to have a comprehensive plan so that we can ensure long-term economic development. We have a predictable and reliable tax system. The global competition today is not just for capital, but also for talent, data, application scenarios, and also high-end economic activities. That means our industrial policy needs to go hand in hand with a talent policy. But one-off concessions will not keep the talent here. They need the room for development, the local culture, opportunities for commercialization of R&D, so that everyone can move upward in this transformation. We should leverage I&T to enhance our competitiveness. We should also support the development of I&T with finance. We should bring together I&T, finance. That way, businesses, capital, and talent will be willing to stay here. This comprehensive approach will be better than one-off and discrete tax concessions. We should strike a balance between concessions and waivers. Instead of an indiscriminate tax waiver, we should roll out targeted concessions for areas such as technology in AI and also research projects involving local universities. Bespoke support is not one-off concessions. Instead, we're talking about something with a clear target and with a clear timeline. Our tax measures should be linked to research universities and the industry. We should incentivize R&D. We should encourage the provision of internship opportunities and also training. We should roll out tax concessions specifically for R&D. We already have tax deductions for R&D expenses. Our next step should be learning from other places. We need a more flexible approach so that pre-revenue R&D bodies and firms get timely support. This matters for R&D. That's because there are those in risk management and digital identity for artificial intelligence. They have to invest huge sums upfront if they don't have revenue yet. Limiting tax concessions to businesses with sizable profits will deny high potential businesses the funding or the concessions they need. We should also guard against long-term reliance on concessions. For every 2 or 3 years, we should conduct a systematic review. We should look at how successful the concession is in getting businesses and talent to come. If a scheme is not working well, we should adjust the scheme. Cementing our role as an international financial center, we have to be careful with what we do. We cannot just rely on a tax regime. We also need a talent policy. We have to work on the entire system. We need an entire ecosystem. We need institutions, industries, and talent. We need healthy interaction between all three, and then we can stay competitive and become an international financial center. Thank you. I so submit.
If no other members wish to speak, I now invite Dr. Webster NG to speak. Dr. NG, you may now speak on the amendments. President, I thank Mr. CHEN and Captain Lothair Lam for moving the amendments on my original motion. I also thank the 2 members for enriching my motion on developing a strategic tax regime to consolidate Hong Kong's status as an international financial center. Mr. CHEN, in his amendment, focuses on how we should roll out targeted tax relief to promote the development of the Northern Metropolis and also to attract key enterprises engaging in frontier technologies to come to Hong Kong. He suggests bringing together and creating clustering effect on enterprises by rolling out tax incentives. The key of the success lies not only in whether there is land, but it is about whether our system is competitive enough to bring together key and leading enterprises as well as top-tier talent to cater to the needs. Mr. Chen raised some pragmatic views, and he said, under the premise of balancing the interests of various stakeholders, we should come up with a corporate rescue regime. This is crucial for us to build a financial center. Captain Lothair Lam speaks from the perspectives of Hong Kong as an international aviation, trade, and shipping center. He suggests that there should be a more targeted tax regime to support asset financing for aircraft and emerging derivatives for green energy. These suggestions are very concrete, and they show that we do not just need an abstract concept as we build a strategic tax regime framework. Instead, we have to ensure synergy between industries with potential, be it aircraft, ships, or commodity trading, as well as asset financing for new kinds of asset. We need a flexible and forward-looking tax regime in order to ensure that there is a growth engine for financial development. These 2 amendments show that a strategic tax regime must be built through macro perspective. We have to dovetail with the National 15th Five-Year Plan as well as the first 5-year plan for Hong Kong. Also, we have to leverage our strength in INT, shipping, aviation, and finance and professional services. We have to transform our strengths into development. I thank the members for the amendments. Thank you.
Undersecretary for Commerce and Economic Development. Madam President, I thank Dr. Webster NG for his motion and other members for sharing their valuable views, and I'll give a consolidated reply to their point. The Commerce and Economic Development Bureau has been making the most of Hong Kong's status as an international financial center and edge in the tax regime in attracting businesses and investment. Invest Hong Kong is committed to drawing overseas and mainland enterprises to Hong Kong and helping them to set up or scale up business here. They Invest Hong Kong also actively promotes Hong Kong's strengths such as a simple and low tax regime, various existing tax concessions, and preferential policy packages. It also offers enterprises aftercare support after they settle in Hong Kong. For example, giving them assistance with listing, establishing their corporate treasury center, and upgrading their Hong Kong branch to regional headquarters, exploring new types of business, etc. It gives businesses a wide array of support to expand their presence in Hong Kong. In 2025, Invest Hong Kong helped 560 overseas and mainland enterprises set up or scale up business in Hong Kong. This number marks a record high. This is expected to bring almost $69.4 billion in direct investment to Hong Kong. These firms are mostly in areas such as financial services and family offices. This helps consolidate and enhance Hong Kong's leading position as an international financial center. They are also a source of substantial global capital and business opportunities in wealth management. This is conducive to the holistic and robust development of Hong Kong's financial sector. Invest Hong Kong will continue to redouble its effort to promote Hong Kong's edge in finance, tech system, and professional services to lure businesses to Hong Kong. On supporting mainland enterprises in going global, the Task Force on Supporting Mainland Enterprises in Going Global, steered by the Secretary for Commerce and Economic Development, serves as a one-stop platform. It reaches out to mainland businesses and invites them to go global via Hong Kong. This task force works through its collaboration mechanism across bureaus and departments. The task force is now taking forward tasks, including attracting strategic mainland enterprises to Hong Kong to set up operations, helping them along the journey with developing corporate functions and business that meet the standards of overseas markets so that these firms get ready for going global. The steps involved include setting up corporate treasury centers and regional headquarters to meet requirements about corporate structures, cross-boundary capital industry certification, and compliance. Besides, the Hong Kong Trade Development Council, a member of the Global Task Force, formally launched the cross-sector professional services platform Go Global Connect in April this year. This platform brings together 8 types of professional services providers, including those in finance, legal, accounting, testing, and certification, and to match the needs of mainland businesses looking to go global. It also provides them with tailored advisory services to help them get ready for going global, so that we can bring more business opportunities for local professional service providers and enables local industries to thrive. Invest Hong Kong, a member of the Steering Committee on Preferential Policies for Attracting Industries and Investment, led by the Financial Secretary. It makes flexible use of preferential policy packages such as land grant subsidies and tax breaks to draw high-potential enterprises that can make major contributions to Hong Kong's economy and industry strengths to our city. Invest Hong Kong also studies various external markets. It serves as a client manager that negotiates terms of settlement with enterprises and also offers firms bespoke services and follows up on the logistics such as settlement, lease arrangements, and legal contract. We want to encourage a greater commitment of corporate resources to research and development so that more intellectual property with market potential will be created while patents and other forms of IP will be traded as commodities. To this end, we rolled out the patent box tax concession in July 2024. From the year of assessment 2023 to 24, all profits derived from eligible IP have been subject to a tax rate of 5%. To strengthen Hong Kong's role as a regional intellectual property trading center, we will roll out new tax measures. For example, relaxing the requirements about tax deductions for buying and using intellectual property. This is to lower the transaction costs of IP. Our goal is to submit the amendment bill to LegCo within this year. The CEDB will continue to enhance collaboration with relevant policy bureaus, departments, and organizations to attract external businesses and direct investment and keep them here so as to cement Hong Kong's status as an international financial center. I so submit.
Secretary for Financial Services and the Treasury. Thank you, President. Once again, I thank Dr. Ng for moving this motion, the two members who moved an amendment, and to all members who spoke on this motion. Members have put forward valuable suggestions on policies across multiple areas in these 2 days. Many have to do with their personal experience. I will relay these suggestions to the Policy Bureau for further consideration. Just now, Dr. Bernard Chen has just spoken on our work regarding attracting enterprises and investment. I will now respond on areas such as strategic tax measures. The tax regime is an important cornerstone for various industries and the overall business environment. I strongly echo the suggestion of Dr. Ng. Hong Kong's first 5-year plan should cover tax measures to lay a solid foundation for attracting enterprises and investment, as well as fostering diversified economic development. A number of members also suggested providing more tax concessions for different sectors to promote their development in Hong Kong. As pointed out in opening remarks yesterday, the government has been promoting economic diversification through targeted and strategic tax measures. Going forward, we will continue to listen to the industries and optimize our tax regime in a timely manner. We have formulated a preliminary framework for the tax concessions under the preferential policy packages. We aim to attract top-tier and high-caliber talent and enterprises to Hong Kong. In the Northern Metropolis or in other areas, enterprises can enjoy the advantages of the preferential policy packages. As in these concessions cut across different policy bureaus, we will discuss the details such as the industries and enterprises to be covered and the tailored requirements for different sectors with policy bureaus and departments. We will consult the Council and introduce amendment bills later this year. While considering any tax concessions, the government must strike a balance between the relevant policy objectives and public finances. We will continue to uphold the principle of exercising fiscal prudence and formulate tax measures with care and caution. I must emphasize that the tax regime is but one of the factors promoting industrial and economic development. As members pointed out, on top of a competitive tax system, Hong Kong enjoys the unique advantage of strong national support and close global connections, as well as an open, safe, stable, efficient, and internationalized business environment. These elements combined pave the way for attracting enterprises and investment and driving economic development. As the FS mentioned, he will convene the first meeting of the Advisory Committee on Tax Policy. We want to tap into the minds of industrial and commercial industry players. We want to better support local industries by way of enhanced tax measures. We want to cover more industries and more investment in order to attract more enterprises to come to Hong Kong. And we are preparing for convening the meeting of the Advisory Committee on Tax Policy. When we have more details that we can announce, we will do so in due course. Now I'd like to turn to the corporate restructuring mechanism. As members mentioned, it is not the case that we don't have any mechanism. We have the policy tool. And this mechanism is in operation under the court. The government previously conducted multiple rounds of consultations on establishing a statutory corporate rescue procedure, I went to the panel on financial affairs to consult members. However, the community has yet to reach a consensus. The labor sector is concerned that enterprises might abuse certain procedures to shift assets and dodge their responsibility to pay employees what they are owed. If the restructuring ultimately fails, the procedure might also delay employees' applications for ex gratia payments from the protection of wages on the insolvency fund. Moreover, professional supervisors, which act as independent third parties, may lean towards keeping the enterprise operational when formulating rescue plans, failing to adequately safeguard employees' rights and interests. As regards SMEs, their representatives worry that the procedure is too complex and involves exorbitant professional fees, allowing only a few large enterprises to benefit. In addition, in such procedures, SMEs often act as insecure creditors with weak bargaining power, who may be forced to accept substantial debt haircuts. As the government goes all out to boost the local economy and pursue development, coupled with our country's strategy of expanding high-level opening up, local enterprises will welcome a better business environment, thus reducing the need for debt-induced corporate restructuring. That being said, we will continue to gauge and assess the views of various stakeholders on the corporate rescue procedure or other restructuring regimes through different channels in order to make the restructuring mechanism more pragmatic and efficient. I'd like to turn to another broader area, that is the international financial center. We have long been renowned as an international financial center. In the latest GFCI, Hong Kong ranks third globally and first in the Asia-Pacific region. Hong Kong's IPO market has also performed brilliantly, with IPO funds raised exceeding $280 billion last year to rank first globally. On arranging Asian institutions' international bond issuances, we continue to top the world, with issuances arranged through the city accounting for about 25% of the market last year. In asset and wealth management, Hong Kong is the largest hedge fund base and the second largest private equity fund center in Asia. Backed by our country and leveraging on the unique advantages of one country, two systems, a robust legal system, free flow of capital, and close connections with global markets, we have set up a solid foundation. We are enhancing the core competitiveness of Hong Kong's financial market on multiple fronts to help our financial services sector grow and prosper. On the securities market front, we will continue to coordinate with the SFC and the Hong Kong X to jointly take forward various measures to further optimize the securities market. These include driving a review on the competitiveness of the listing regime and implementing other measures to enhance market trading and clearing mechanisms. This will facilitate more issuers and investors in participating in investment and financing activities while boosting market efficiency and infrastructure. As a global offshore renminbi business hub, we'll continue to boost offshore renminbi liquidity, enrich renminbi products, upgrade our financial infrastructure, and actively explore emerging markets, thereby complementing our country and advancing RMB internationalization and elevating the opening of the capital account. We are speeding up the development of the international gold trading market and fully establishing a central clearing system for gold in Hong Kong, targeting a trial run within this year. We have topped the world in relation to cross-boundary asset management center. Let's look up, regarding the figures in 2030, we are expecting a significant boost, and this is exactly how we have managed to rise through the ranks. Of course, this is music to our ears, but we cannot rest on our laurels. We cannot stay complacent. When it comes to asset management, we have launched different enhancement measures to make our tax regime even more attractive. Next month, we will introduce legislative proposals to the Council. This includes promoting the family office business, providing a more favorable tax environment for the industry, and expanding the fund distribution network and cover more areas such as precious metals. We hope to attract more family offices to come to Hong Kong to set up and operate. This will drive the demand among different areas. We look forward to member support. and we will also enhance our role as the CTC around the world. The working group led by the FSTB has finished our work. We have addressed the current industry pain points. The working group will host an industry forum in June 2026, bringing together overseas and mainland corporate representatives to explore the latest CTC development trends and announce an action plan. It includes introducing a pre-approval mechanism alongside existing concessions, offering pre-approved CTCs and their associated enterprises greater certainty, additional tax concessions, and operational flexibility. We will also roll out other measures such as stepping up promotional efforts and communication targeted at multinational corporations, as well as enhancing training for relevant practitioners. I'd like to address another area. We have already introduced subsidiary legislation to the Council, including lowering the capital requirements for infrastructure investment and adjusting the risk parameters for general insurance business. To dovetail with the 15th Five-Year Plan and formulate Hong Kong's Five-Year Plan, the FSTB has set up 2 task forces to advance the drafting work for financial services and the Treasury respectively at full speed, aligning with the country's overall development strategies for the next 5 years. We'll continue to keep a close pulse on market conditions, continuously optimize the efficiency, infrastructure, and regulatory regimes of our financial market, and formulate appropriate tax measures to drive economic development and cement our strength as an international financial center. The 15th Five-Year Plan is the blueprint and national agenda for the country's economic and social development over the next 5 years. Our 5-year plan will outline the development vision, core objectives, key areas, and major initiatives for Hong Kong in the next 5 years, proactively dovetailing with the National Development Plan. We'll take today's valuable insights on board for internal research, aiming to formulate appropriate measures in the 5-year plan that align with economic development, address industry needs, and balance policy objectives with fiscal discipline. I so submit. Thank you, President.
I now call upon Mr. Rock Chen to move an amendment. President, I move my amendment. I propose the question to you that the amendment moved by Mr. Rock Chen be passed. I now put the question to you as stated. Will members please proceed to vote? Members please press the present button. Will those in favor please raise their hands? Those against please raise their hands. I think the question is agreed by a majority of each of the 2 groups of members present, that is, those returned by the election committee and those returned by functional constituencies and geographical constituencies. I declare the amendment passed. Captain Lothair Lam, as the previous amendment has been passed, you may move your further amendment. President, I move my further amendment. I propose the question to you that the further amendment moved by Captain Lothair Lam be passed. I now put the question to you as stated. Will members please proceed to vote? Members please press the present button. Will those in favor please raise their hands? Those against please raise their hands. I think the question is agreed by a majority of each of the 2 groups of members present, that is, those returned by the election committee and those returned by functional constituencies and geographical constituencies. I declare the amendment passed. Dr. Webster NG, you still have 1 minute 51 seconds to reply, then debate will come to a close. President, I thank the 38 members for raising their views on my original motion. We have reached a consensus through the debate. A strategic tax regime lies in a flexible and competitive framework. The 2026 Global Wealth Report was released yesterday, and Hong Kong has topped the world as a global cross-border wealth management center. And this proves that we're moving in the right direction as we complete the economic ecosystem. We have upgraded our software already, and so what we need to do is not to levy more tax, but we need to levy tax smartly. We have to adopt a broader perspective and think about how to formulate a forward-looking and flexible tax strategic framework that is competitive in order to comprehensively enhance our competitiveness. The previous success was not a replicate of others' models. Instead, we have to look for a framework that caters to our needs. We need a strategic tax regime because we need further wisdom based on our current low and simple tax regime. As our country move forward and as the world restructures its economic pattern, we have to continue to upgrade ourselves as an international financial center. I now put the question to you that the motion moved by Dr. Webster NG as amended by Mr. Rock Chen, Captain Lothair Lam be passed. Will members please proceed to vote? Members please press the present button. Will those in favor please raise their hands? Those against please raise their hands. I think the question is agreed by a majority of each of the two groups of members present, that is those returned by the election committee and those returned by functional constituencies and geographical constituencies. I declare the motion as amended passed. I now adjourn the council until 11 a.m. on Wednesday, the 3rd of June 2026.